Trading is simple, but not easy. There are so many little things that can go wrong when you first start out. And it's easy to make these mistakes. Mistakes you aren't even aware that you're making. There's nothing worse than thinking everything you've done is perfect, only to look again and see your account in the red. That's why I've decided to cover the 7 deadly trading sins. If you can make sure you aren't committing these deadly sins, your trading has a far stronger chance of turning the corner. If you want to tip the trading odds in your favor, simply keep watching and make sure to avoid these 7 trading sins at all costs.
Wake up, filthy.
I'm working on dying.
Being a gluttonous trader is dangerous. Trading bigger positions comes with all sorts of risks. If you haven't collected the right data or evaluated it properly, then increasing your position size will result in disaster. The other side of that coin is risk. By trading bigger positions, you're increasing your risk by exposing more of your portfolio to the market in fewer swings. What I mean by that is if your positions are 10% of your portfolio, what happens when you hit a drawdown or losing streak? You could kiss most, if not all of your portfolio away in a matter of days or weeks depending on how you trade. Is that a risk you need to take? Play it safe and manage your risk accordingly. Your adherence to your risk management rules will ultimately make or break you as a trader. Don't trade big because it feels right or you want to. Stick to your system and avoid trading gluttony. Trading wrath or revenge trading is a recipe for an early bath. Any trading based on emotions is for that matter. Revenge trading is when you make a loss, and you're determined to make that loss back again, so you try to trade it back. In a nutshell, it's trying to recover your losses. Whilst it might sound like nothing, the problem is far bigger than you realize. Revenge trading makes you break your own rules, sometimes without even realizing. You end up taking trades that don't fit your criteria. You trade positions you normally wouldn't trade. You ignore entries just to get in. See where I'm starting to go with this? When you trade on emotions, you effectively ignore your strategy. You know, that little thing you've been perfecting for months and years, you become no better than a first-time trader. And you know what happens to those. Trading wrath is dangerous and easy to avoid. Trading greed is pretty much everywhere. I've seen it in professional trading desks, retail traders complaining about it. Heck, I've even experienced it. It's one of those things that can creep up on you. Chasing trades is silly. The only difference between revenge trading and chasing trades is the motivation and emotion behind it. Revenge trading is often based out of fear, whilst chasing trades can be motivated out of greed. Either way, you end up ignoring a set system with parameters, that's your system, in order to take trades. Convincing yourself there's a trade setup is just plain gambling. If your entry criteria is not met, don't trade. If you're chasing a trade because you want to trade, you might as well go down to the casino and play the slots because there's no difference. Remember, your goal is to trade well, not to trade often. Trading sloth is a big reason most traders don't actually make any money. How can you when you're holding on to losses? A lot of traders I know set stop losses levels and then think that they're done with a trade. If only it was that easy. Sure, a stop loss is there to limit your losses, but it's not the full picture. If you're ignoring everything that's happening between your entry and your stop loss, then you're holding on to losses unnecessarily. Sometimes you need to exit your trades early. And yes, that means before your trades hit their stops. You might be thinking, well, I've set a stop, and it's there for a reason. And sure, you might be right. But remember, this is the stock market we're talking about. It's not exactly predictable, and things change quickly. Sticking to the "this is my stop" mentality can be dangerous. You see, the problem with this mentality is that you might be missing out on signals that tell you to exit your trade early. And believe me, you'll come across them. Whether you uncover them and act on them, is a totally different story altogether. Think of it like this. If you let your losers run and you keep cutting your winners short, how are you ever going to tip the odds in your favor? Another way I've seen traders hold on to losses is by ignoring their stops completely, and in some odd instances by not setting them at all. Don't flush your money down the market drain. Set your stops and monitor your trades for early exit signals should it go the other way. Just because you have a system or strategy, it doesn't mean it does all the work for you. Pride is a special kind of trading sin. Ignoring your losses or even trying to hide them is pretty silly. Let me tell you, I've never come across a perfect system, and neither will you. There is no holy trading grail. You will lose money, and you'll continue to lose money for as long as you trade. You just need to make sure that the money you make far outweighs the money you lose. Drawdowns are inevitable. Losses are inevitable. Losing money is inevitable. The only thing you can do about it is limit your risk, thereby making sure you lose less. So whether you lose or not isn't important, because you will. What's important is how much you lose and how consistently you lose it. So if you hear those traders that gloat about how they never lose, let them. I guarantee you they won't be around for very long. Trading lust is not as saucy as it sounds, and it's one of the big reasons I find most new-to-market traders blow their accounts. Overtrading, as I've touched on previously, is unnecessary and asking for trouble, and overtrading is far more common than you think. Remember, and I've said it before, your goal is not to trade often but to trade well. It took me years to realize that. Don't commit this sin. Your broker might love you for that, but your bank balance won't. There's a Warren Buffett quote that I love, and I think it fits perfectly here. The stock market is a no-called strike game. You don't have to swing at everything. You can wait for your pitch. Overtrading has no place in your strategy. Keep the lust for other things. Trading envy is probably one of the more subdued sins, but that doesn't mean you won't encounter it at one or more points in time. And I think it's an easy one to commit to. Heck, it's human nature to see something nicer than what you have and want it. But in the stock market, it's all about perception, if you ask me. Coveting other people's trades and strategies usually results in one thing, and I'm sure I don't have to say what that is. There is no perfect system, and traders who hop from one system to the next tend to never learn this. Think about it. Do you want to have 1 year's experience in 10 systems, or 10 years' experience with one system? Take a guess which scenario will leave you to trade another day. Build, adopt, and create a system that suits you, then perfect it. The problem is that most traders don't want to put in the time and effort to do this. They come across fancy, gimmicky advertising online and think there's some magic formula that'll make them rich. Focus on a system that suits your personality and fits in with your lifestyle and goals. Coveting and envying someone else's will only lead you down the empty wallet path. Remember, trading is simple but not easy. But if you avoid these 7 deadly trading sins, I promise you your chances of making money from the markets in a more consistent way is a lot higher. Avoid the 7 deadly trading sins, and remember, don't trade bigger positions. Revenge trade, chase trades, hold on to losses, ignore your losses, overtrade, covet, and envy other people's trades and systems. Stick to these rules. Avoid these sins, and your trading will flourish a lot sooner than you think.